Hello everyone and welcome to my YouTube channel. This video continues with the 9th part of the series. How does money and our global economic cycle work? It starts right after the intro. Stay tuned.
Insights for the informed investor.
Corporate forms. Please note that the company forms discussed here apply in the European Union, particularly in Germany. Other countries have very similar company forms. Before setting up a company, find out in detail about the possibilities in your country. Tax consultants, the relevant authorities or lawyers can help you with this. Is a company a sole proprietorship, a limited liability company, or a public limited company? These are just 3 examples of the types of company that can be used when setting up a business. Each form has its advantages and disadvantages. However, one thing should be mentioned in advance. You can only go to the stock market with a public limited company. The other companies are not designed for this and do not have a legal license. However, it may make sense at the beginning if you do not set up a public limited company. This is mainly due to the fact that you do not have enough equity capital to set up the company. You can find out why this is the case in this chapter. In general, a distinction is made between partnerships and corporations among the many different types of companies. Partnerships are generally characterized by the fact that a natural person is liable for all aspects of the company. A corporation, on the other hand, is liable with the equity capital of the respective corporation. Accordingly, the incentive for a company to become a corporation is also high. Partnerships are divided into sole proprietorships, general partnerships, in Germany, OHG, dormant partnerships, partnerships under civil law, and limited partnerships. The partnerships, sole proprietorship. The sole proprietorship will be considered first. This form of business is characterized above all by the fact that there are few barriers. You can get started easily. What are the requirements for setting up a sole proprietorship? It's very simple. First of all, you need to register a business. You can do this directly with your local authority. Once you have registered your business, make sure you obtain your tax number from the tax office. You can use this to pay tax on your sales and profits when preparing your balance sheet. You will also receive a tax registration form from the tax office. This must be completed so that the amount of your taxes can be determined. As you can see, there are not many barriers to setting up a sole proprietorship. However, you should carefully consider the advantages and disadvantages in order to make a sensible decision. One major advantage is obvious. Setting up a sole proprietorship is very easy. All you have to do is pay a visit to your local trade office. As soon as you have the business, you can go to the tax office and clarify everything you need to know about taxes. Another advantage is that you can keep all profits for yourself. There are no complex structures or similar that mean you have to transfer profits every day. In addition, you do not need any share capital when setting up the company. This is particularly interesting for young founders, as they do not have to raise the necessary share capital when setting up a GmbH or similar. As a sole trader, you are a so-called small business owner if you do not exceed a certain turnover limit. Under this regulation, you do not have to show VAT on your invoices. Furthermore, the formalities for setting up a company are even simpler than usual. You are also not required to prepare a balance sheet. You only have to prepare an income statement. However, you can also do this without a tax consultant. Another decisive advantage is that you do not have to keep double entry accounts. A major advantage could be that you have a good reputation with the banks if you want to borrow capital. This is mainly due to the fact that you are always personally liable as a sole trader. However, this also depends on how well you have been able to repay your loans up to the time you set up your business. However, in addition to these numerous advantages, you should also be aware that there are disadvantages. As a sole trader, you are usually also a business founder. What does that mean? This means nothing other than that you should be aware that you are liable with your entire private assets. If charges are brought against you and you are not sufficiently protected, this can lead to the destruction of your own livelihood. However, you can also use various insurance policies and services at this point. This gives you the advantage of being covered even in the extreme case of a consumer being charged. Under no circumstances should you underestimate this security. Another important point is that, as a sole trader, you are a lone fighter. You cannot rely on other shareholders or partners to support you. This means that you must always be aware of your risk. The final disadvantage is that you cannot easily increase your equity capital. On the contrary, you have to finance any increase in your equity from your own resources. The alternative, of course, would be to take out debt capital. However, nowadays, more and more banks tend not to lend capital so easily, especially to startups. This makes it more difficult to find a favorable loan for your startup. As a sole proprietor, you do not have any other shareholders or partners, but you do have the advantage of being able to seek advice from experts. They can help you find the optimal solution to your problems. Another crucial point is that you can also deal with your equity in advance. You can think about what the various structures need to be so that you remain liquid in the long term. Finally, let's look at the sole proprietorship from an investor's perspective. If you want to support a sole proprietorship with capital, you should be aware of one thing. You cannot acquire shares in the company in question. On the contrary, you can only contractually retain a certain share of the profits. Another crucial point is that your decision is very risky. A sole proprietor is exposed to a high level of risk, and accordingly, it is the investors who leave their capital in a sole proprietorship. It is best to protect yourself in advance and find out as much as possible about the person who founded the company in question. With a sole proprietorship, a lot depends on the founder. Accordingly, you should also get to know the owner of the respective company in order to really develop yourself further. Not only to develop yourself, but ultimately to ensure that your capital is maximized in a sensible way. The big advantage of investing in a sole proprietorship is obvious. You've been there from the beginning. Think about one thing. If you had the opportunity to invest in Google today when the company was still very small, would you do so? Almost nobody would say no to this aspect. If you invest in such young companies, you can maximize your return very quickly. However, you need a feel for good and bad companies. You only develop this eye through longer experience in the investment sector. The capital you invest in individual companies should be seen as a form of gambling money. The partnerships. General partnership. Another company form that you can choose when setting up a company is the so-called general partnership. A general partnership is an abbreviation for a general partnership. In this case, several shareholders come together and form a company. According to the definition of commercial law, a general partnership is a partnership. What does that mean? This means nothing more than that the general partnership has natural persons as liable parties. In this form of company, the partners must be liable both with the company's own capital and with their own capital, and thus with their private assets. So what is the difference to a sole proprietorship? The advantages of a general partnership are many and varied. One major advantage of this type of company is that you do not need any minimum capital. You only need at least 2 shareholders to successfully set up the company. Another decisive advantage is that the general partnership can consist of both natural and legal persons. In the case of legal entities, you benefit from the fact that you no longer have to be liable with your own capital. Otherwise, you have the usual procedure, which also applies to many other types of company. You can open insolvency proceedings. In addition, the general partnership can also be a shareholder of another company. Another decisive advantage is that you have shareholders who have equal rights. Of course, it ultimately depends on the respective personalities to what extent they can support you or not. However, it can be said that choosing the right shareholders gives you a decisive advantage. You can delegate tasks and also ensure that you always have advisors by your side. In addition, you do not have to attend all legal appointments. It is perfectly sufficient for one shareholder to be present, as they are authorized to represent the company externally. A basic building block of the general partnership is that you must conclude a partnership agreement. This is also a key difference when you compare this type of company with a sole proprietorship. If parts of the shareholders' agreement are not meaningful, the relevant provisions of the German Commercial Code apply. But what is actually recorded in the shareholders' agreement? This ensures that all company-specific aspects are explained. For example, voting rights are allocated, and the amount of contributions that each individual must pay is determined. In addition, the procedure for the withdrawal of a shareholder is defined. The case of the death of a shareholder is also regulated. Now that you have gained an insight into the advantages of the general partnership, the disadvantages should of course also be highlighted. One major disadvantage is the full liability of all shareholders. You should also bear in mind that you have to keep double-entry bookkeeping. This means that you will usually have to call on a tax consultant right from the start of the company. This results in high fixed costs that may not be covered. You should also be aware that the shareholders must be in agreement. The success of a general partnership depends largely on whether or not the partners are in agreement. You should also be aware of one aspect. The legal form of a general partnership can only be chosen by fully qualified merchants. You should ask yourself the following question before setting up the company. Are there other merchants with whom you can set up the company? They should all pursue the same goal in order to operate effectively. For a lender or investor, an investment in a general partnership is already more secure than an investment in a sole proprietorship. The general partnership has deposits that the shareholders can draw on. In addition, at least two people are always involved in the formation of this type of company. This means that higher loans can also be granted. The liquidity of the persons ultimately also increases the liquidity of the respective company. You no longer have to worry about a guarantee or similar, as you have several people who are involved with you in the respective company. There is one point you should not ignore: the choice of company name. This is still chosen incorrectly, time and time again. In the case of a general partnership, you should make sure that the company is recognizable as a merchant. You should avoid misleading information, and any similarity to existing companies must be ruled out. The next point is of crucial importance, as this is often done incorrectly. The abbreviation Offene Handelsgesellschaft must always be present in the name. If there is no natural person in a general partnership who is liable for the company, this should be made clear. Legislation stipulates that the name must make it clear whether a natural person is liable or not. A general partnership is formed in just a few steps. One of the reasons for setting up this type of company may be that you want to secure sales advantages. Up to a turnover of just under $500,000, you can register as a civil law partnership. In commerce, this corresponds to a small business, which has already been introduced. Another significant difference to a sole proprietorship is that the formation of a general partnership is entered in the commercial register. The local court is responsible for this. The registration must be carried out by a notary. Please note that you will incur costs at the beginning. The formation costs are therefore much higher than for a sole proprietorship. When the company is entered in the commercial register, care is taken to ensure that all shareholders are entered with their registered office. In addition, the power of representation in relation to the company is determined. Another important point is that branch offices must also be registered. Of course, as with a sole proprietorship, you must also register the company with the trade office. After all, you cannot set up a business without a trade license, so you should bear that in mind. You can also refuse a shareholder's right of representation. To do this, you must make a note of this in the shareholders' agreement. Joint representation can also be agreed. You can also become part of a general partnership as a minor. Please note, however, that you cannot yet exercise all rights in full. The legislation limits various aspects here. It is best if you discuss this topic in detail with the notary. As you can see, you have a lot of freedom with the general partnership if you use it to your advantage. However, make sure that you meet all the requirements for setting up this company. Most general partnerships fail because the partners cannot reach an agreement. Therefore, make sure in advance that you select the right people for the relevant areas of the company. If you've enjoyed the video so far, don't forget to like it. Subscribe to my channel and activate the bell to give the channel added value and support my channel for free. The partnership's silent company. Another important type of company that you will come across again and again is the so-called silent partnership. What characterizes a silent partnership and what are the advantages? Basically, it should be noted that this form of company differs from the other forms of company, mainly because it does not appear externally. It is purely an internal company. Two people are required to set up a dormant partnership. The first person is the owner of the respective company, while the second person is the silent partner. This person joins the company and has a right of control. They have no right to manage the company. In addition, the silent partner must of course also make a contribution. The amount of this contribution is decisive. Liability is only limited to the amount of the contribution made by the silent partner. Another crucial point is that the silent partner assumes the position of a creditor if the company becomes insolvent. This means that they can reclaim the amount they have invested. So what are the advantages of this type of company? One major advantage is that you can be advised by your silent partner. Especially when setting up a company, it can be an advantage if you can make use of one or two advisory services. Many people do not know how to regulate and set up different areas of their company. At this point, you can fall back on a silent partner. They can quickly give you a helping hand with one thing or another. Of course, this depends on which specialist area the partner supports. Another important advantage is that you receive an invisible loan. What is an invisible loan? It's simpler than you might think. An invisible loan is a loan that simply does not appear to the outside world. The dormant partnership does not have to be entered in the commercial register, nor does the shareholder have any other public presence. Nevertheless, they must make a contribution so that they can participate in the company. This means that you ultimately have a higher proportion of equity that you can use. Of course, the silent partner can request reports from time to time to make sure that everything is running smoothly. But the main advantage is that you don't have to worry about whether the company in question will become publicly visible and thus reduce your creditworthiness. You also have a very high degree of economic flexibility. If you want to join a company as a silent partner, you have complete freedom. You can decide how much you want to invest and how long you want the contract to run. Which brings us to another advantage. You are free to choose when you want to exit. When you set up a dormant partnership, you do not enter into any conditions. This means that you are free to choose how much you want to invest and when you want to leave. Of course, the entrepreneur can ultimately decide whether or not all these conditions suit him. As a rule, however, very few entrepreneurs will refuse to take on a silent partner. Now we come to a really important point, the distribution of profits and an exclusion or limitation on participation in losses. As explained at the beginning, the silent partner is only liable up to the amount of his contribution. It should also be noted that the silent partner does not necessarily have to participate directly in the profits. This can be set out in a contract. If you wish to share in the profits, you should also mention this explicitly. This way, the respective entrepreneurs know that you should set this up accordingly. You are also free to choose the amount. You decide what percentage of the profit seems appropriate to you. Of course, the entrepreneur must agree, but you have the advantage that you are co-financing a large part of the business, so there is a relationship of dependency. However, you should also bear in mind that you are working together on a profit-sharing basis. You should not ignore this under any circumstances. Now we come to another advantage that you enjoy as a silent partner. You have no additional funding obligations. You make a one-off contribution and this remains in place. You do not agree to any clauses stating that you must increase the amount of your contribution by a certain percentage every year. If you have agreed to such a condition and regret it, you should get a lawyer to help you. You can usually cancel these contracts, but this can also vary. As you can see, investing in a dormant company is a quick process. However, make sure that you choose the ideal company for your needs. Finally, the personal component must not be neglected. You must be on the same wavelength as the entrepreneur in question or the other shareholders. This is the basic prerequisite for successful cooperation. The partnerships, limited partnership. Let us now turn to a company form that is very frequently chosen in Germany, the limited partnership. This company is abbreviated to limited partnership. This form of company is also a partnership. However, this form differs greatly from the other partnerships. You need to be aware that there are both limited partners and general partners. The general partners make a contribution and have the right to manage the respective company. However, it should be noted at this point that the general partners are also liable with their own assets. Limited partners, on the other hand, make a contribution and are only liable up to the amount of the contribution. This is a key difference that many people overlook with limited partnerships. Another crucial point is the division of management rights. Limited partners can only act on behalf of the respective company in external relations. However, the general partners decide on all business-related decisions. As can be seen from this network of relationships, there must always be two people to form a limited partnership. One person must register as a general partner, while the other person should register as a limited partner. You may have heard of the Gesellschaft mit beschränkter Haftung and Kompanie Kommanditgesellschaft. This type of company is a hybrid form. Although the limited liability company has not yet been presented in detail, this hybrid form will be briefly explained in this section. In the case of the limited liability company and limited partnership, you have a legal entity as a company representative. However, this person is only liable with the equity of the limited partnership. What are the advantages of a limited partnership? One major advantage of a limited partnership is that you don't have to worry about how much you have to contribute. You can set up a limited partnership without any minimum capital. As mentioned above, limited partners are only liable up to the amount of their contribution. A limited partnership also gives you a high credit rating. However, there are also disadvantages that should not be overlooked. One major disadvantage is that an entry in the commercial register is required. You will need to visit a notary for this. This means that you already have high fixed costs to cover when setting up the company. Another crucial point is the choice of partners. Similar to a general partnership, the success of a limited partnership is determined by the choice of suitable partners. This is because the general partners of a limited partnership have a right of representation in the external relationship. Accordingly, it is all the more important that they act in line with the company's objectives. Furthermore, the limited partners must also internalize the company's objectives. If this is not the case, the limited partnership cannot be managed optimally. Therefore, when choosing your partners, pay attention to which areas they could take on. Ultimately, you will have a great advantage if you divide up the different areas and thus ensure that you get the most out of your company. The main component when setting up a limited partnership is the Articles of Association. What is a partnership agreement anyway? This is usually drawn up with the help of a notary. It lists the shareholders and all their contributions. In addition, the purpose of the company is explained and the duration is determined. The term limited partnership must appear in the name of the company. Another important aspect is that the management is defined. Similar to a general partnership, not all partners need to be involved in the management. Participation in the losses and profits of the limited partnership is also clarified. Another crucial point is that all shareholder meetings and resolutions are recorded in the agreement. The exclusion of certain partners is also specified. Finally, it is also ensured that shareholder shares are transferred. All of this is recorded in the agreement so that the formation of a limited partnership also takes place within the legal framework. Another disadvantage of the limited partnership is that you are obliged to keep double entry accounts. This is usually associated with additional costs for you, as double entry bookkeeping is much more extensive than simple bookkeeping. In addition, a limited partnership must draw up an annual balance sheet at the end of each year. Another important aspect is that you also have to take care of a profit and loss account. As you can see, you cannot avoid a tax advisor with a limited partnership. However, you should see this as a positive. A tax advisor can save you money, whereas you would not be able to do this if you were taxed yourself. The limited partnership is subject to a total of 3 different types of tax. These are income tax, trade tax, and VAT. In the first step, the profits of the company are allocated to each individual partner. The company itself is therefore not subject to income tax. This is because each shareholder must pay tax on their own share of the profits. If the shareholder is a natural person, income tax is payable. However, if the partner is not a natural person, but rather a legal entity, corporation tax is payable. However, the limited partnership is always subject to trade tax. You do not have to pay trade tax up to an allowance of just under 24,500 euros. You also have the advantage with a limited partnership that you can invoke the small business regulation. This means that you do not have to pay VAT. The partnerships. Company under civil law. The next type of company considered in this chapter is the civil law partnership. Have you ever heard of a civil law partnership? This form of company is the simplest form of partnership. You can set up a civil law partnership with either two natural or legal persons. Of course, both should want to achieve a common legal business purpose. The formation is very simple. You don't have many modalities and can get straight down to business. You don't have a minimum investment. You can even ensure that a civil law partnership is formed by itself. All you need to form a company is a partnership agreement. This can also be formulated verbally. However, it is advisable to put the agreement in writing. The reason for this approach is very simple. If you later disagree with the other partners, this approach gives you security. A civil law partnership has some special legal features compared to other companies. An important special feature of this legal form is that it is not an actual company as defined by the German Commercial Code. Accordingly, you are not obliged to enter your company in the commercial register. If you operate a civil law partnership with a commercial business, it automatically becomes a general partnership. This also means that an entry in the commercial register is required. Another exception applies to all persons who operate a small business. In principle, they are not considered merchants within the meaning of the German Commercial Code. Another important advantage of a civil law partnership is that you have simple bookkeeping. You do not have to have double-entry bookkeeping and can draw up a simple income surplus statement. However, in addition to these two major advantages, there are also disadvantages that should be mentioned. A major disadvantage is liability and management. You can stipulate the management by contract, whereas this is not possible in the case of liability. All partners are jointly and severally liable in a civil law partnership. What does this term mean? This term indicates that all partners are liable with both the company's assets and their private assets. You should also be aware that you must agree the company's objectives with the other partners. Otherwise, the failure of the civil law partnership is almost guaranteed, which is of course fatal. You cannot limit your liability. Accordingly, you should handle your capital carefully in order to avoid any risks. Finally, some of the main advantages and disadvantages of the civil law partnership should be highlighted once again. One thing is certain, the high degree of flexibility speaks in favor of this form of company in all cases. What's more, you don't have to spend a lot of time on unnecessary formation formalities. Formation is very quick and easy, so you can get straight down to business. As the previous sections have made clear, you do not need double-entry bookkeeping. Furthermore, the law does not prescribe a specific form for the contract. This means that you have a free choice and can ultimately decide how to draw up the contract. A major advantage is the borrowing of outside capital. Sole traders do not have such easy access to outside capital. This is due to the fact that sole proprietorships are usually startups. You should also bear in mind that sole proprietorships do not have large sales at the beginning. This ultimately leads to the point that you have virtually no opportunity to raise outside capital. This is different with a civil law partnership. It is much easier for you to obtain outside capital from banks and invest it. You also have a free choice of managing director for this type of company. Here too, the law gives you a great deal of freedom. However, the disadvantages are also clear from the fact that you have so much freedom. For example, it is sometimes not clear which legal situation the civil law partnership is subject to. Furthermore, the profits from the company are taxed privately. This naturally increases the tax burden for each individual partner. Joint and several liability is another disadvantage. A further disadvantage could be that all shareholders must unanimously agree on important decisions. This can lead to decisions in the strategic and operational running of a company being delayed considerably, although this does not always have to be the case. Another major disadvantage is that you cannot run a commercial business. This naturally restricts many areas of business. However, you should consider this aspect before you set up your company. Find out which sector you want to target. Then, with a little research, you will have already found out which types of business are excluded. In this way, you can consciously narrow down your options right from the start and ultimately ensure that you don't fall into any legal traps. Another disadvantage is that you have limited legal capacity. This is also due to the fact that you have a high degree of flexibility. This gives you many advantages on the one hand, but also disadvantages that arise due to the sometimes poorly defined legal situation. This was the 9th part of the series. How does money in our global economic cycle work? I hope you enjoyed the video, so I would be very happy if you give me a like, subscribe to the channel, and activate the bell. That way, you won't miss any more videos from me and you'll be informed immediately when a new video is published. Thank you for watching the whole video and see you soon.